Hi guys, this particular video is for you, especially because this video is the beginning of a series of videos on technical analysis. And so I would like to welcome you to this video. This is BO from Forex Winners Club, and our focus in this video is to introduce technical analysis, and the subsequent videos will handle the specific aspects of technical analysis. You wouldn't want to miss this one. And I would like you to note that we are back in full force, and we'll be doing a lot of videos every other week so that we get moving and get to start attacking the markets the right way as professional traders. In case you have not subscribed, please hit that subscription button now and turn on the notification bell. Why you have to do that? Because then the moment we release new content, you will be notified immediately. Do remember that at the end of watching this video, just comment below the video on aspects you like, on aspects you don't like, and let us know which other videos and topics you'd like us to cover so that we'll be able to do that in good time. Remember to share our videos as well, and let us grow together. Okay? Now, when we talk about technical analysis, we as traders mostly, this is what we do. Last time we covered the three kinds or types of analysis you could do as a Forex trader. We looked at technical analysis. We saw, fundamental analysis. And again, there was another aspect, of sentiment analysis or sentimental analysis, okay? Now, we are focusing on technical analysis mostly as Forex traders, and I would like you to understand the reasons why. Okay, so we head in straight and see what there is. Technical analysis effectively is a method that we use to evaluate financial instruments or securities using past data. We use past data or historical data to be able to determine what or predict with a good level of accuracy what the market is going to do in the future. And for that reason, as traders, we depend mostly on price and volume. We depend mostly on price and volume. And guys, if you've never traded using a concept like volume on your chart, stay tuned here at Forex Winners Club, because we'll be able to show you how to make use of a combination of price and volume to move your trading to the next level. And so, get to realize in advance that technical analysis is simply studying past data and using that knowledge to knowledge such as volume and price to be able to determine what the market is likely to do next. Okay. Now, what is the purpose of doing technical analysis as a trader? We simply do technical analysis so that we are able to identify specific. As a trader, you need to identify specific price patterns because there are many of them. There are very many price patterns on a chart, and we want to focus on those winning ones. Yeah, those that can make money for you. So we focus on price patterns. We focus on trends in our financial markets. Okay. Whether you are trading stocks or you are trading currencies, you do that. Why must we focus on identifying price patterns and the trends? Because we believe, and I would like you to be keen on this, we believe as technical analysts that price patterns always repeat themselves. Price patterns repeat themselves. What others would call self-fulfilling prophecy. Yes? So if you know the patterns, you can be able to predict very accurately, okay, or relatively accurately, what price is going to do next. These patterns can be used to trade stocks, can be used to trade Forex, commodities, okay, and many other financial instruments and in different financial markets, okay? So, what could be some of the principles behind technical analysis? What are some of the things as a trader you need to focus on? 3 of them I collected 3 that I think are very important for you as a trader. Number 1, I would expect as a technical analyst, okay, that you think in this manner. All the information you need about the asset on your chart, that information is right on your chart. Look at that. That all relevant information about a stock, it could be a currency pair, could be a commodity, whatever it is, all the information you need is right on your chart. Whether you are trading from MetaTrader 4, MetaTrader 5, or a TradingView or whichever charting software you are using, the chart is a reflection of all the information that you probably need about that particular instrument. If you are trading Euro USD as a currency pair and you have Euro USD 1 hour charts, then the number of candlesticks on your chart or the number of bars on your chart, if you look at them, they are giving you the information you need to trade or not to trade that currency pair. Correct? The next thing you would like to focus on as a technical analyst, this is also a principle, is stock prices move in trends. You can always substitute the word stock with a currency pair, with a commodity, with whatever other instrument you're trading. Okay? So the prices move in trends. And that's why ordinarily on any particular chart, you would see price move up, come down a little bit, move up again, come down somewhere again, proceed up, come down, sometimes move up a little bit, and then start going down again. Prices will always move in trends. And this is what we would call an uptrend. Prices moving upwards, making higher highs and higher lows. Okay? And this is what you might also want to call a downtrend. Okay? When price starts doing this. Okay? Going up, going down, going up, going down, that manner. So this is a downtrend. So prices will always move in trends. And it's important as a trader for you to be familiar with trends. Principle number 3, very important. History tends to repeat itself in the forex markets and stock markets. History repeats itself. Okay? The way a double bottom chart pattern behaves will not vary from day to day. If you analyze double bottoms properly, or double tops, or triple bottoms, triple tops, head and shoulder patterns, or whatever candlestick patterns, those specific patterns that you have studied in the market, they always behave relatively similarly. Okay? They behave the same way throughout. Or there could be variances here and there, but generally you could use those chart patterns to predict what price is going to do next. For example, this is a chart, this is a pattern most people maybe trade with, that price moves up, comes down a little bit, then moves further up. What most people would say, these are 1, 2, 3. So when this level is broken, okay, some traders would analyze like that. When price breaks this level, it means it has begun trending up. And what you would do as a trader then is expect it to come to this level, look for a signal here like a candlestick pattern, and you place a trade here for a sell, a buy, sorry. You buy at this level. So if you are familiar with 1, 2, 3 pattern, you would be able to trade it regardless of what market you are in. That's what we are saying, that history repeats itself. Okay? Price will always be trending up or trending down or simply ranging. Okay? Just playing around the same level. Okay? Then we move over to other aspects. You need, as a technical analyst, to focus solely on your charts. We have already seen that the charts contain all the information you need. Chart patterns have all that you need. Candlestick patterns have what you need. So when you look at a chart on MetaTrader 4, TradingView, or whichever charting software you're using, focus on what you see on your chart. Past prices will be able to tell you what you can, consider as a valid trade, if you must trade at that point in time. Because remember, you are better off not trading if you have no valid signal than trading and losing. Okay? You also need to consider incorporating technical indicators to help you, especially if you are a beginner trader. You may not jump straight into price action because price action takes some time to learn and master. Okay? While it's possible to do that, we suggest that at the beginning, you can incorporate a few selected indicators, okay, to help you in your trading. But that's a choice you have to make. Now, as a technical analyst, you also need to start anticipating future price movement by considering past price movement. In other words, when you study price from the past days, if you are trading on a daily chart, or from the past hours, if you are trading on an hourly chart, then that past movement should be able to help you predict future movement. Okay? So everything you need about a given asset is right on your chart in front of you. So all you need to do is look for specific patterns and use some indicators for confirmation, all right, for you to be able to decide whether you are trading long or you are trading short on that particular instrument. Technical analysis falls in two classes. We have qualitative analysis and quantitative analysis. Whenever we talk about qualitative analysis, we are talking about using qualitative tools such as support and resistance levels or support and resistance zones. Now, qualitative because people draw these things differently. There's a level of subjectivity here. One person would draw them higher than another, a resistance higher than another, okay, or a support lower than another. So we vary. Your support and resistance levels could be slightly different or significantly different from my own support and resistance levels because of human subjectivity, human bias and other things. Also, you need to understand that in qualitative technical analysis, you are interested in changes in polarity. What is causing a change in market trending up or market trending down? That could be subjective again, okay? It's not something that you can pinpoint and say, okay, here exactly is where the market is turning, all right, up or turning down. Now, chart patterns equally, chart patterns are very subjective, okay? Chart patterns are equally subjective because you might see a pattern that I cannot see on the same chart, depending on our skills. Okay, someone will say, hey, look here, it's a double bottom. And another person will say, I can't say it. I can't see that. I can't see the double bottom you're talking about. So those are qualitative aspects of technical analysis, okay? And that's why some people would find challenges. But quantitative analysis is purely using technical indicators. So this is more of what I would call a price action territory. Qualitative analysis is mostly price action. Price action, the reason it becomes challenging some people is the subjectivity in it. Like I've given you an example. When you tell people draw support and resistance, give it to 10 people, you'll have different levels of support and resistance. Okay? Give a chart to people and ask them what patterns do you identify. They will identify different patterns again. So that's why it's qualitative. But we also look at quantitative, things that are based on statistics, things can be based on formulas, things that can be automated. They are a part of what you might call a software, like an indicator. Now these are technically things like indicators that can help you determine market trends. That's quantitative. Yes, you can say the trend is strong this manner, or it's not strong, or it's weak, okay, using an indicator. For example, you're using moving averages. Moving averages are the same regardless of who is using them. If you have a 20 period moving average and have a 20 period moving average on the same chart, we will have the same view of the market. Momentum indicators are also quantitative. The momentum is the same regardless of who is trading. So the technical, the quantitative analysis side is more what I would call objective. If you're using the same tools, we are likely to have the same signals, same results, right? If the tools have been configured to have the same settings, okay? Qualitative, a little bit challenging because that depends on personalities, okay, and skills. All right, but it's important to be aware that what I recommend most of the time, even though I can trade with pure qualitative analysis or pure quantitative analysis, I like combining the two. And that's why I always I keep encouraging my followers If you are comfortable with pure, you know, qualitative analysis or pure price action, do it. If you are okay with quantitative analysis or what you might call indicator-based trading, do it. But if you find challenging, both of them are challenging, pick a few things like support and resistance from this side, combine it with moving averages from the other side, and you become a better trader that way. Okay? Great. Key concepts in technical analysis. I would like you to be familiar with this, that in technical analysis, we look at several things. These are not exhaustive in any way, but they are important. Number one, you will most likely come across the concept of simple moving averages. Moving averages will help smooth price action, and they will help you even determine trend directions, can also help you act as dynamic support and resistance. There will be videos covering each of these aspects separately. Okay? And so just know that technical analysis, we might be using moving averages. We'll be using other technical indicators. Now, technical indicators, a number of them are based on moving averages. Okay? The likes of stochastic, MACD, yes, some oscillator and other things. They, in a way, use moving averages that have been formulated differently. The Dow theory is important to help you understand how price moves. We'll cover it in a separate video. The Dow theory is what I drew earlier on, helping you study the market as it moves up and down, or down and up in that manner. Okay. So the Dow theory helps you understand how to do that. Okay. Then we have Elliott wave theory is another way of studying how market moves. Then we have technical indicators, MACD, RSI, stochastic, Bollinger Bands, and many others. Whether they are part of MT4 default installation as a package, or they are the ones you custom built and you have to copy them into the indicators folder, they are useful for you. And as a trader, you can benefit from them. How do you then perform technical analysis? And this is important for you guys. Technical analysis requires that you understand a number of things. And the way I look at it is, number one, first understand Dow's theory. The Dow's theory helps you understand that a market is trending up when it's making higher highs and higher lows. A market is trending down when it's making lower lows and lower highs. Okay? If it's mixing the two, then it's a ranging market. So you need to start from defining the trend. Okay? And you cannot define a trend unless you understand the Dow's theory properly. Of course, unless you're going to use indicators that are probably based on that concept. Now, you look for quick results. As a technical analyst, you don't want to spend too much time on your charts. You should be able to have a simple, clear view of your chart and determine whether you can trade that asset or remove it from your chart. Now, you read charts to spot trends. So when you look at your 1 hour chart or 15-minute chart or daily chart, you should be able to instantly tell whether the market is trending up or trending down. Okay? You need to understand the concept of support and resistance. So I'm giving you ingredients of what I would call a successful technical analyst. A successful technical analyst would have to put into consideration what I said, Dow's theory. Okay? Dow's theory, which helps you understand how trends behave. You need to understand trends. You need to understand support and resistance levels or areas. You need to pay attention to volume, because volume can influence how the market moves. You need to be familiar with moving averages to help you filter price fluctuations. If you are keen on using Dow's theory, you can use other tools apart from moving averages. But for now, we can use moving averages to help us decide whether the market is trending up or down. Later on, of course, I'll be able to show you how you can trade without indicators at all. You can use other indicators, including oscillators, to help you give secondary confirmation to your signal. Okay? So it's important that you get familiar with all these concepts to help you become a technical analyst. Now, the primary tools we use in technical analysis are mostly charts, and they could be indicators. This could be candlestick charts, mostly. I've already mentioned the number of them, like double bottoms, okay, and indicators, okay. So you also need to consider volume. Price is reflected in the chart in the form of candlesticks or bars or line graphs, okay. So it's a bar, it could be a bar chart, whatever it is. I think that's what we are covering next. So you need to be familiar with trends, patterns, and cycles, because price moves in cycles. We'll cover these things, don't worry for now. You also need to consider things like momentum of price, if there is force behind a particular movement. Again, there are those who consider sentiments, how many people are thinking price is moving up, how many people are thinking price is moving down. Okay. Now, charts that we use could be line charts, like this is a line chart. I don't use it unless I'm drawing support and resistance. Others could use bar charts. I don't find this useful. And others use candlestick. This is probably the most popular chart type of charts, candlesticks or candlestick charts. And this is what I prefer using. This is an example of a chart with support and resistance levels, a trend line. And I told you the 1, 2, 3 chart pattern. And we are using candlesticks. This is my trading style. This is how my charts usually look like. You might be wondering whether technical analysis has advantages or disadvantages. Well, yes, technical analysis has several advantages. One, it focuses on price movement. You don't worry so much about news. You leave news to fundamental analysts. Then price patterns are easy to identify. Once you master how to identify a double top, it's easy for you to identify it on any particular chart, on any particular time frame. And charting as a technical analyst is simple and it's inexpensive, or it's very cheap, because MetaTrader 4 is free. Yeah, for example, you can just download it from your broker and you have access to the charting software from where you can have candlesticks displayed. You could be able to draw support and resistance. You can add moving averages. So it's easier for you to do technical analysis. However, technical analysis has several disadvantages too. And these disadvantages would include one, it is subjective sometimes, because like I said, where you draw support and resistance could be different from where I draw. So that introduces subjectivity. In other words, we might be looking at the same chart but understanding it differently, and therefore I'm deriving a buy signal, you are deriving a sell signal from the same chart. Okay, so there could be biases. The method we use to interpret the charts as technical analyst is not standardized, probably related to the first point. It's not standardized, and that's why when we study technical analysis, we start trading, we have different results, because there's no standard way of understanding or mastering technical analysis. Okay, sometimes what works for you doesn't work for another person. Okay, substantial movement has already taken place by the time you realize a trend. This is a problem we'll come to deal with later on. That sometimes you see price moving like that, you see price moving like that, you see price moving like that, and you say, okay, it has been doing the same thing. Now from this point it's likely to continue moving up, and the moment you buy here hoping that it will just continue like it was coming down, move up, then you just realize, is it familiar? Is that something familiar? That you buy at a level and immediately the price breaks that level and continues the opposite direction. So these problems occur, and we'll be able to get to understand how we can avoid a number of those useless losses, very dangerous losses. Now, it's time for action. If you are not subscribed, please proceed and hit the subscribe now button and remain a subscriber of Forex Winners Club. Don't just subscribe and stay subscribed without waiting for notifications for you to know when a new video is loaded or uploaded. Just hit that or turn on that notification bell. Okay, then you will be able to be notified instantly whenever there's a new video, because we are planning to be releasing videos at least 2 or 3 every week. Now, you don't have a broker yet? What are you waiting for? Go ahead, move down to the description section of this video. Right below the description of this video, you will be able to find a link to a number of our recommended brokers. Click on what you like, one of the brokers. For example, you can choose Hot Forex. Okay, that link there, register your account and start trading. Do you want to talk to me? Sure, you can do that. Comment below the video. You can email me also. The email is right there under in the description section. Just email us and let's get to know. But I recommend commenting, sharing our videos, liking the video, and letting us know what you enjoyed in the video. If you enjoyed, share with others and let us know which other videos you would like us to do for you. For now, I would like you to know in advance, our next video will be practical. We will be trading on MT4 using indicators. This is where we say the rubber meets the road, okay? So we expect that in the coming video, we will start looking at various indicators and how we can use them to identify sell signals and buy signals. I bet you do not want to miss that video, because from there, we'll be covering the various indicators. You saw we had a bunch of indicators listed somewhere here. We'll be having videos covering MACD, RSI, stochastic, Bollinger Bands, moving averages, and several other things, okay? So it's that video. These are the kind of videos you are waiting for. After this, then we'll look at price action. Then later on, we'll combine price action with indicators to help us make better decisions as traders, okay? And so, kindly proceed to subscribing if you're not subscribed. And, if you have liked the video, comment below it and let us know what you enjoyed. Thank you for staying through to the end with us. See you in the next video. Bye-bye.